Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very nice day of trading today. And in today's markets, guys, well, the pullback simply continues at this point. And that is essentially what it is, a very healthy technical pullback after two very beautiful weeks of rally. We did not have any major economic news in the markets today or yesterday. We also did not have any major developments in escalations of geopolitical conflicts, not between Russia and Ukraine, and not really in the Middle East either, even though the conflicts still do remain. No escalations anywhere, guys. So it is pretty much what it is, a very healthy market pullback. So in today's video, we're going to explore the pullback more into detail. Number one, we're going to be first covering the Oracle earnings that happened yesterday after the close. That stock was roughly down 6 to 7% today. So we're going to take a look at exactly what happened with Oracle. Number two, we're of course going to cover our major technical analysis rundown of our major stock market indexes, and thereafter take a look at our big tech names and see how everything is shaping up. And after these 2 days worth of pullback, are there some possible dips to be had in the markets? We're also going to take a look at a few of the high-flying names over the past 2-3 weeks and check in on them as well, names like SOFI and stuff like that. Thereafter, guys, of course, we're going to take a quick look into my portfolio for the trades made today and, of course, the trades that I have remaining into the end of the week. So it should be a very interesting video, guys. Let's get right into it, shall we? So the SPY today down about 0.31%. The QQQ is down about 0.34%, and you can see pretty much, guys, across the board, the market was very negative. All sectors pretty much heading to the downside for a little bit of very healthy consolidation. And we can see that even better expressed when we take a look at the heat map, guys. You can see that for the most part, a lot more names were indeed red than green. We did have a few sectors that performed well on the day, such as consumer defensives and pretty much communication services, but that is where the bullishness stopped. Yes, we did have some decent outperformance in big tech. Google coming out with a new advancement in quantum computing. So we're going to take a look at exactly what happened for Google when we cover their technical analysis in the later portion of the video. The timestamp will always be down below in the description. Semiconductors, unfortunately, taking another big hit. They really have not been performing too well over the last 2-3 months, have they? This time can be attributed to the economic restrictions that now China is retaliating for against the United States, right? So once again, that sector remains slightly out of favor. You can see everything in semiconductors today was pretty much to the downside. Big tech remains fairly mixed. Financials as well, not having the best day, but we did have some outperformance in the credit card, guys. And then healthcare as well, fairly mixed sector on the day, and the bottom half of the market not having a good day at all because we continue to battle between the push and pull with the longer duration yields, which do affect a lot of sectors such as industrials, real estate, utilities, and stuff like that. So all in all, guys, a bit of a broad market pullback today, but I wouldn't say there's any major red flags as of just yet. On the one-day relative, you can see this even better, guys. Only communication services to the upside, and that is largely just due to the impact of Google and Meta in that sector as a whole. Consumer defensives, names like Walmart, Costco, Coca-Cola, Pepsi, doing well today as well, and that is pretty much where the bullishness stopped. Everything else to the downside, and on the 1 week relative, guys, kind of the same allocation, right? To where consumer cyclicals this time and communication services, Google and Meta, have been up nicely, but everything else kind of taking a well-deserved pullback. Energy, however, remains the biggest loss leader over the course of the last 2 weeks. So before we get into more technical analysis, guys, let us dive into something very juicy, and that is going to be the Oracle earnings. So why exactly did Oracle go down? They had a very good quarter, and they came up slightly short in terms of the numbers for this quarter, but it was a very solid quarter, guys, and they also came up slightly light on the guidance. This, in a nutshell, is the NVIDIA effect. The stock prior to today's price action, guys, the stock was up high 70s, almost 80% year to date. Matter of fact, it is still up 70% year to date. And when you run so much so quickly over the course of a year, you have to justify the outperformance by continuously raising the bar further and further above analyst expectations. And unfortunately for this quarter, Oracle was not able to do that. So let's have a brief look into the numbers, shall we? So taking a look down here, you can see that they did miss on EPS, although posting very decent EPS as a whole, very tiny miss there, and a very tiny miss on revenue as well. And just because of that and the slight miss on guidance too, the stock is down 7%. We've seen this many times, guys, over the past 2 quarters to where the bar is set very high for certain companies. And even though the numbers may appear very good at face value, the stock just gets hit by Wall Street because they're not consistently raising the bar. So now let's jump into the article, shall we? Oracle shares suffer the steepest drop of 2024 after earnings miss. I mean, the steepest drop, guys. They really haven't come down much in a single day event. all year. It's been a very good year for Oracle, so indeed the largest single percentage drop of the year so far, but I wouldn't say there's any major red flags for the company. They're still doing very well. Let's move on, shall we? So they dropped almost 7%, steepest decline in a year, following the database software vendor's disappointing earnings report. The shares are still up about 69% for the year, which will be the best annual performance since the dot-com boom of 1999. They're having a fantastic year, guys, and the guidance as well, although coming in slightly under the expectations, the guidance was actually very, very solid. Shows that the company continues to grow very, very well, especially in the cloud infrastructure build-out phase that a lot of the hyperscalers are using Oracle for, right? So revenue rose 9% from a year earlier. That was very good. Net income increased to 26% to 3.15 billion. That is a net income margin of 22.4. Where does it stand in terms of the company's history? Well, you can see what happened here in the most recent, let's call it about 2 years, right? We had a gross margin drop off, operating margin drop off as well, and the net margin drop off too. Why? Well, because they were building a ton of warehouses to house all of these infrastructure projects. So they were spending a lot of money, guys, to kind of grow and scale the business. And obviously in that process, the margins do take a temporary hit. But it was only that. It was a temporary hit. Margins are now coming back up, slightly curling, both on gross margins are curling. It's not posted just yet. And even the operating margins are curling quite well. And the net margins, as you can see right here, guys, I mean, we just gave the number, right? The number is about 22.4. So the margins are going to be curling back to the upside, both operating and net. So I don't really see a problem with the company's net margins. Very, very healthy net margins as a whole. Let's move on further, shall we? So revenue in Oracle's cloud services businesses, the most important factor of Oracle's business right now, jumped 12%, accounting for 77% of total revenue. Very big business for Oracle right now, and they are not done growing, and we'll take a look at that a bit later. A bit of a stumble here for a stock that's created some lofty expectations for itself. Reminds you a little bit of NVIDIA, right? Now, Oracle expects revenue growth of 7 to 9%, which is very good for the current quarter. That would be about $14.3 billion. Analysts were expecting 14.65, so there's your slight miss on guidance, once again contributing to the slight decline in the share price. EPS miss on guidance as well, 1.5 to 1.54 is the guidance. Analysts looking a little bit higher at 1.57. So there you have it again, couple percentage points miss on EPS, but still, nevertheless, guys, a very, very solid EPS and revenue projections from the company, despite being underwhelming in terms of the analyst expectations. Oracle's biggest growth engine has been cloud infrastructure, of course, where it's competing with Amazon, Microsoft, and Google. The business is booming due to soaring demand for computing power that can handle artificial intelligence projects. Oracle said that revenue in its cloud infrastructure unit surged 52% from a year earlier. That is fantastic growth, guys. And they really have been growing at that similar clip. I mean, we can take a look at some of their earnings slides, and I'll bring that. They don't have the earnings slides for this quarter, but if we just use September's, right? I mean, everything is growing very, very, very solid, guys, in terms of revenue, right? Based on the remaining performance obligation backlog. The remaining performance obligation backlog in terms of cloud infrastructure is very, very, very solid here. In terms of the revenue growth, I mean, here's the projections, 65 billion for next year, which is going to be very, very, very solid. I know it says fiscal year 26, but they run one fiscal year ahead of the calendar year for this company. So growth is really not a problem for them at all. They also just signed an agreement with Meta. This is a brand new partnership. As a matter of fact, it was not disclosed as a partnership in last quarter's earnings. As we can see down here in one of the slides, although they have a ton of partnerships already with very famous companies, in terms of the hyperscalers, as you can see, there was only Microsoft, Google, and AWS. Now adding Meta to that list as well. So very, very, very solid there. Oracle Cloud Infrastructure trains several of the world's most important generative AI models because we are faster and less expensive than other clouds, said Larry Ellison himself, the founder of the company. The remaining performance obligations, guys, had growth of 20%. The backlog total now remains at about $98 billion. $98 billion, guys, is an extremely, extremely large number. Take a look right here. The company next year should be generating about $60 billion. So they're at least guaranteeing the next 1.5 years worth of revenue just in the pipeline in terms of future sales that they have to deliver. So all in all, very solid quarter for the company as a whole. I'll leave you with a few more highlights here. Record level AI demand drove Oracle Cloud Infrastructure revenue up 52%, as we just saw, a much higher growth rate than any of our other hyperscale competitors. GPU consumption, look at this, was up 336% in the quarter. They're going very, very heavy on this. And we delivered the world's largest and fastest AI supercomputer, scaling up to 65,000 NVIDIA H200 GPUs. Who actually, well, I mean, they say it's the world's largest, but it's actually not. Now, so far, we have not seen Elon and Tesla's. They're supposed to have 100,000 combination of Blackwell GPUs and also H100 and an H200 mix as well. So for now, they're reported to be the largest, but when Tesla actually proves that they've built a network of 100,000 GPUs, that will be the largest. Obviously, that will be used for Elon's many different companies, right? It's a network for both Tesla purposes and Twitter purposes and Starlink purposes, etc., etc. Now, the RPOs are up 50% to 97 billion, as I was saying. Oracle's AI agents automate drug. This is crazy, guys, and this is going to be some of the things that AI is not talked about for right now. Everybody recognizes it for the chat bots and other purposes as per customer service and improving efficiency within the corporation, but the scale of AI goes much further than that, right? So they automate drug design, image and genomic analysis for cancer diagnostics, DNA sequencing, audio updates for electronic health records for patient care, satellite image analysis to predict and improve agricultural output. I did not know that. That is fantastic. Fraud and money laundering detection, very logical, dual-factor biometric computer logins, and real-time video weapons detections in school. Oracle-trained AI models and AI agents will improve the rate of scientific discovery, economic development, and corporate growth throughout the world. The scale of the opportunity is unimaginable, not only for Oracle, guys, but all of these hyperscaling companies that are working on AI. The scope goes far beyond what everybody's talking about, which is kind of a just corporate efficiency. Right? The scope of this, as they said, the scale of opportunity is indeed unimaginable. So at this point, guys, let's take a look at some of the numbers now that Oracle's come down 6%. Is this stock in a decent location to possibly be a buy? Well, let's have a look here at some of the forecasts, shall we? So for the next couple of years, the analysts have a average, well, this is the next year, 1 year forecast. Average analyst price target is about 200, with the highest point being about 250. That being said, look at this great EPS expansion, really scaling up a lot, 25 through 27. And even in revenue, guys, very nice scale of revenue. We took a look at their remaining performance obligations, and they were still quite good, right? So that being said, in terms of the company, the only tiny little thing, well, it's not very tiny, but the only kind of thing that I can criticize Oracle for, guys, is the amount of debt that they have onboarded as of recently, right? Building that infrastructure has cost them a lot of money, and they will eventually have to service this debt. This is a problem that no other of our major hyperscaler companies have, right? Microsoft, Meta, Amazon, Google, Apple, they do not have this debt profile. They have a lot of debt, but they have a lot more free cash flow and a lot more cash on the balance sheet. So this balance sheet for me gets like a B minus, right? It is a lot of debt, $94 billion worth of debt to be specific, only generating about $12 billion in free cash flow per year, and only about $10 billion of cash on the balance sheet right now. So this is problem number one for Oracle and the biggest red flag for the company, in my opinion, right now. In the grand scheme of things, it's relatively small, but in the event that that revenue starts dropping off in the next couple of years, well, they're going to have to find a very creative way to start servicing this debt in a very aggressive manner, because you can see they really scaled it up here over the past 2 years, an extra $20+ billion in debt. That is the biggest, well, the only major red flag for me, right? Now, in terms of the EPS and revenue growth, very healthy right here. Revenue 9.4 per year for the next 3 years, and EPS growth 16.5, very impressive number as well. Where do they stand in terms of valuation? At 177 right now. They have a PE ratio on a forward basis for 2024. Year ending, of course, of 28.73. Not too bad. When we divide that by their EPS, we get a PEG ratio of 1.74. I'll remind you, anything under 1 is very good. Anything between 1 and 2 is okay. And anything above 2, you know, you need a second look. It starts to be a little bit rich. At 1.74, it's not that bad. The company can expand its multiples, most likely to where it was just at, right? About that $200 analyst price point. But the company is not very cheap right now as a whole. So is it a buying opportunity for me, not really. I'm not really interested in playing Oracle. I think that company has run a ton most recently. And when we look at the weekly support levels, I mean, you can argue that there's some support down here around the 175, but it's not that solid, right? Take a look at the monthly. The monthly is very extended from the 12 EMA. I wouldn't mind playing Oracle, but they have to come down and I have to get a very good price for them. That being said, for me, that price would be about the 150 mark. If they come down to 150, possibly be interesting for a swing trade or maybe even a longer term position right now, but the company just isn't cheap. I do think that there are better deals in big tech right now. Google is front and center, the first one that really comes to mind, and they do not have the high debt load that Oracle has. That being said, nothing wrong with the company. If we have shares from all the way prior back here, I see no reason to sell at all. But starting a position up here, guys, the risk reward profile is not the most favorable. You can squeeze a little bit more juice out of this stock. Of course you can, guys, in the context of an overall bull market, but it's just the risk reward profile as a whole is not the most attractive opportunity right now, but the company's performing very well, and that is pretty much everything for the Oracle earnings. Hopefully you guys appreciated that. Now let's jump right into our technical analysis portion of the video, shall we? So moving on into the SPY, guys, I mean, I hate to say this every single video, but it's true. Not much has changed. Everything is very, very logical right now. Very nice daily uptrend by the bulls, looking for the higher lows for possible further trend continuation. We will see if they can play defense at the 12 or perhaps at the 26, but one thing's for sure, they do not lack space right now. Anything above 584, still just looking for a daily higher low for a possible further trend continuation. And even if we were to roll over this into a daily downtrend, you guys need to understand that we have a lot of space on the weekly timeframes as well. Take a look at all this space, guys. Anything above pretty much that same 584, looking for a weekly higher low for possible further trend continuation. So no problems for the bulls right now, guys. The bulls are looking very, very healthy. Just a bit of a short-term pullback right now. One thing to keep an eye on, though, guys, is going to be the CPI release for tomorrow. If this comes in a little bit harder than expected, or a lot harder than expected, 2.8, 2.9, the markets will react in a negative fashion, because keep in mind, one of the things that people are focusing on right now is going to be the impact of the incoming Trump administration and the impending tariffs that Trump is potentially going to put on other foreign countries, right? Now, a lot of people do argue, and I do agree, that this is a negotiation tactic, and possibly the rate of tariffs that Trump will implement are not the ones that we are seeing now on the headlines, right? 20+%. I know he slapped a few already on China with about 10%. He slapped as well some on us in Canada and some on Mexico too, in terms of securing the border. But in terms of other restrictions against Europe and more on China and more on Asia, that is still left to be seen. But of course, if the inflation ticks up, it will kind of reiterate those fears of a resurgence, a kind of second wave of inflation. Now, I don't think that's going to be the case, but of course, you guys know the markets react instantly to this data and can price in that factor very, very quickly. So if we get a negative report, expect the markets to decline a little bit further and kind of accelerate this consolidation to the downside, but no major red flags as of right now. Moving on to the SPY as well. The SPY, the QQQs, excuse me, are looking very, very solid here, guys. No major red flags. I mean, it's to be expected, right? If we get a few more days like this, would it look so awkward? Not really, right? It would just kind of look like a breakout and retest of prior resistance, which is now going to be support. That's kind of exactly what we're going for here. Just a breakout, kind of a retest of the level, and possibly continuation of the daily uptrend. Anything above 501.62, looking for the daily higher low for possible further trend continuation. No major red flags just yet. And even if we lose the daily uptrend into daily downtrend, we would still just be looking for a weekly higher low. At this point, anything above 485, guys, still just looking for that weekly higher low for further trend continuation. Most of the levels, if they do somehow smash through this level right here, well, I'll keep an eye on the 12 EMA on the weekly, which is sitting about 502. But as of right now, no major red flags. And with the big bullish November close that we had, not only on the Qs, but also on the SPY, right, leads us to believe that the December month could be one that does close green. It's just the early portion of the month right now has been a little bit of a challenge and a little bit of a technical pullback. Now moving into XLF financials. So XLF continuing on its daily downtrend right here, but the chart is very, very healthy, guys. Even though the bulls have lost the uptrend into daily downtrend, it was to be expected. Look how far the weekly came away from the 12 EMA. And this is not an industry such as semiconductors or such as tech that can pull away from the 12 EMA in a rapid fashion and just stay up here, right? Usually when we pull so far away from the 12, we tend to pull back into it at least that's been the case many times, right? You know, pull away from it, move sideways until it catches up, another leg higher, and then eventually you do have to kind of retest that. So now as well, we've pulled a lot away from the 12 EMA, just looking for a weekly retest. So the entire time that we're in a daily downtrend, you should understand what the higher time frame bulls are going for. Anything above 46.10, just looking for a weekly higher low for further trend continuation. A ton of space. I would not be too nervous for these as well. Like I was saying in a few past videos, right? The banks have run a lot, guys. They've run a lot. Look at the weekly timeframes on the banks, right? JP Morgan, Bank of America, Wells Fargo, even Charles Schwab, names like this, right? They have run an absolute ton. They're very extended from their moving averages. A little bit of consolidation really is not going to hurt them. They're still maintaining largely the weekly and monthly uptrend, so no major red flags, even though we have had about 2 weeks of pullback in the sector so far. Moving on to healthcare right now. So healthcare continues to be a sector that is struggling, right? We know we have the weekly downtrend in play right now, and the bulls are trying their best to set up for the weekly uptrend shift. Now, take a look at the daily. When we zoom in on that attempt for the weekly trend shift, you can see that the fib bounce was about a 70% retracement. Usually when you get a 70, what am I doing here? Usually when you get a 70% retracement, it gives the bulls a very solid chance at kind of getting enough space to then recreate into a daily uptrend. When you get the daily uptrend, at least this time, we can also be looking for a weekly shift in momentum as well to the upside. Now, of course, the bulls were looking very solid in trying to attempt this, and that is until the unfortunate situation with UNH and their CEO happened and kind of inflicted more pain on the XLV healthcare sector as a whole. Now, I do like UNH from these levels, 550 to 525. It came into the level very hot. And although the situation with the former CEO was a very unfortunate situation, to say the least, of course, especially for his close friends, the family, and the short-term direction of the company, well, unfortunately, guys, it pains me to say this, and it might sound a little bit shallow, the fundamentals of the business have not changed, right? Eventually, there will be a new CEO appointed. The new CEO will probably be as well a veteran of the company, and the business model is not changing, right? This is a company that truly, the business model is kind of set in stone right now. It kind of just runs on autopilot. It doesn't really need a CEO with very bright and innovative ideas. I'm not saying that the prior CEO was not a person like that, right? But it's not a tech company that requires constant innovation to kind of grow and accelerate, right? This is a very solid company with a very proven business model as well, and is the leader in the healthcare providing space in terms of healthcare insurance, right? In terms of the ethics and the direction of the healthcare sector as a whole, that is a very different topic, right? I'm just talking about the inherent fundamentals of the company, and so far they are maintaining quite nicely. So it could be a buying opportunity, 550 down to 525, but just you don't get a little bit too quick on this, right? We could have, further follow through to the downside, which is why I say if we're looking to maybe spend, I don't know, I'll throw a number out there, right? If we're looking to spend $2,000 on UNH buying the dips, right? Maybe only a half or a third size position right now, and possibly if it dips into the future, that is when maybe even myself, I might allocate a little bit more because we still control the higher time frames, right? It's still a decent monthly uptrend right now, looking for the back test of the previous all-time highs. So that is kind of the recap on UNH. Very unfortunate situation, and has kind of brought down the whole index as a whole, because you guys know UNH is a very large, well, you can't see it, my head's in the way. UNH is a quite large weight in terms of the healthcare sector as a whole. So that is pretty much the direction. We will look to see if they can attempt this trend change. And if not, unfortunately, guys, the weekly downtrend will just continue. Good thing for us, we have very large support down here, 140 all the way down to roughly 135. That is the big monthly level. Prior resistance from 2020 and 2021. Why is it so squished? I don't know why this chart is so squished. So right here, right, 140 down to about 135. Retest should be very hard for the bears to kind of get through that one without being challenged by the bulls, of course. Now moving on to semiconductors, another sector that's really been struggling. And I mean, not much has changed here either, right? Every single week for like the past 10 weeks, we've been saying the same thing. It's a tale of being trapped between two levels. 260 and 250 is the resistance above, and below us 230 down to 220 is the support. We are just trapped in this kind of wild tightening range right now. So any short-term price action is kind of meaningless, right? They're going to react to the downside from support down here, and up here will still be resistance. As of right now, no clear trend. The bears had the downtrend, the bulls engulfed, tried to go for the trend change, and unfortunately unraveled with those China economic headlines in terms of restricting potentially some products from Intel and AMD. Those are not new headlines. We've had those headlines for the past 6 to 9 months. Usually AMD, Intel, and even Micron are kind of the ones that get hit the hardest with those news headlines. That being said, we'll take a look down here. The 200 daily EMA is about 232. So if we continue these declines, guys, it's going to open up some very nice opportunities in your favorite semiconductor stocks, whether those are ASML, TSMC, AVGO has their earnings on Thursday, NVIDIA, of course, your favorite stocks, right? If we encounter more declines, great opportunity to possibly write some short puts, maybe not on the index, but on some of your favorite names at some key support levels. And you guys know me, I've been playing these ones fairly often in the past 2-3 weeks as well, as we kind of head towards these lower areas of consolidation. Now moving into the IWM Russell. So the IWM as well, I mean, not looking too bad, guys, but this has been the same thing for the last 2 weeks that I've been talking about. I keep bringing up the IWM sector weightings, right? So keep in mind, financial services, industrials, healthcare, and technology. It is not only technology, right? So when the heat map looks like this, and financials have been largely consolidating for 2 weeks, healthcare has been consolidating for a long time now, industrials as well have not been performing the best, only some technology names have been performing well, what stands to argue that the Russell is not going to be able to really get the lift that people are anticipating, right? That being said right now, guys, still looking for a daily higher low. This is one single daily leg to the downside. You can make an argument that they've set up the daily downtrend already, but when we take a look at the lower time frames, I mean, there really wasn't any hourly uptrend reset at all, right? It's not as if we put in a few days of upside and then we kind of reverse, creating the lower high into lower low. In my opinion, this is still one large move to the downside. Daily uptrend is still healthy, loads of space, and it's very impressive that in the last 2 weeks of downside, guys, we have barely given back much of the move at all. That could change in the next few days, but over 2 weeks of consolidation, we've barely given back 40% of that. I keep putting on double fibs, my bad. We've barely given back 40% of the move. So I would say that the bulls are proving to be more resilient than not. What are we looking for here as well? I mean, it's still a weekly uptrend. That is clear as day right now. Looking for a possible weekly higher low. Anything pretty much above 226. Looking for the weekly higher low for possible further uptrend continuation. When we get more broad sector market participation, that will also help the IWM and its relative components. So keep an eye on this support level below us, guys. 232 down to about 226 is the range. That is the prior range from, of course, the 2020 and 2021 highs up there. Moving into the Dow Jones right now. Well, the Dow Jones also coming to the downside a little bit, and it kind of looks like the Russell, right? They kind of have almost the same chart, with the Russell being a little bit more volatile. That being said, daily uptrend is clear as day right now. Still just looking for the daily higher low. This is not a daily downtrend either. This is just one big move to the downside. We're coming into the level of support that I identified. I mean, granted, it's not the strongest one, but it's the closest one we have. Kind of between the two moving averages on the short-term daily and the prior resistance, which is current support. Looking for the daily higher low. At this point, anything above 42,300, we'll be looking for the daily higher low. And just focus on the higher time frames here. Who is indeed in control? Well, it has to be the long-term weekly bulls, does it not? Anything at this point above 42.9, just gonna be looking for a weekly higher low for possible further trend continuation. Not looking too bad as a whole. Now let's take a look at some of our sectors that we didn't do yesterday because I kept the video a little bit short, which is the 10 and 20-year yields. Now, the yields, of course, have been on a weekly downswing, of course, as of recently, right? But they're not setting up for the weekly downtrend just yet. For that, we need the lower high into lower low. But focus on the monthly, guys. The bulls are, well, the bond bulls, the yield bears in essence, right? They're looking for the monthly downtrend continuation. As we move into further and further rate cuts, I do think the impact of, this is a very complex trade, right? There's a lot of factors at play. There's the US debt levels, which is keeping other foreign nations from buying our debt because they're worried about a possible downgrade on the quality of US debt, which would keep the interest rates a little bit higher for a little bit longer. People are also worried about the potential resurgence of inflation catalyst, also keeping rates higher for longer. Then there's the whole argument of the bond vigilantes that are pushing the price higher and just pure speculation trading. There's a lot of factors at play right here. One thing's for sure, though, the rates are coming down. My focus is going to be on the monthly timeframes for yields moving forward, looking for the lower high into possible lower low as Jerome Powell stays steady on his rate path declines, right? The expectation, I mean, we can look at them right now for the expectation of next week, right? December 18th is the next Fed meeting. And as you can see, the rate probabilities for a cut next week is going to be about 85.8%. So we're probably going to get one, guys. And as we kind of add these rate cuts, these longer term yields cannot stay up here forever. forever. However, it may take a little bit longer than expected to come down, and that is also viewed in the TLT2, right? So I'm not opposed to building a longer term swing for a long on TLT, but just focus on the fact that it may take a little bit longer than expected to get the lift that everybody is anticipating, right? Especially for playing options, you know, maybe June's, even next December's could be the better duration contracts rather than trying to go for the very quick move that may just not happen, right? These yields can kind of, the TLT can kind of hover down here, and the yields as well, although they're slightly elevated right now, they can just hover around here and putter around before we start getting those big deep downswings, before we kind of iron out a lot of these possible inflation fears, the US debt fears and whatnot. And those may only be taken care of once we're maybe a month and a bit into Trump's administration, and we have more clarity surrounding his policies as a whole. Now let's move on to Bitcoin as well, because crypto has not been very favorable over the last 2 days, right? But using Bitcoin as our guide, have we lost any major levels here at all, guys? No, not really, right? Still a very healthy daily uptrend right now. We're kind of retesting these lows as we stand at about 93,700. Even if we lose those guys, there's a very large support area below us, which is about 91 down to 88. I mean, I could extend this box a little bit and encompass these lows right there. As you can see, it's a very solid area. We're just kind of consolidating sideways right now. The altcoins are taking, you know, most of the declines as of right now, but Bitcoin itself is looking quite fine. And, you know, even the proxies for Bitcoin as well. MSTR, although it's been consolidating, it's holding price really, really well at this point, right? So moving on to Bitcoin, the analysis remains the same. We are still looking for possible trend expansion because they have the daily. They also control the weekly as well. Any dip's going to be looking for the weekly higher lows, guys. A lot of space, anything above 65K. Looking for the weekly higher lows for further trend continuation. And look at this November candle close, right? Leads us to believe that most likely we probably will have some follow through. And this was kind of my expectation, getting maybe a little bit of a wick to the downside early December, and then maybe ending the month of December with a candle formation, something like that, right? Where you have a tail to the downside early on in the month, but then we close the month strong. That is still my expectation for the markets. Just have to be a little bit patient. And you know, everything is kind of looking the same, right? Ethereum has lost the daily uptrend as of right now. That is clear as day. Higher lows were here, and now we're kind of rolling over, opening up the door to use the 4K level, this level right here, 38, 39, 4,000 as resistance, and going into a little bit of weekly consolidation. So I think Ethereum as well it's not an altcoin, it's a very big chain as a whole, but in relation to Bitcoin, it is still technically speaking an altcoin, right? So if Bitcoin consolidates sideways, all these altcoins have ran a ton. We could see some further weekly consolidation, but that'll just be it, right? It's just going to be weekly consolidation. Anything above 2351, looking for the weekly higher low for possible further trend continuation. Max pain for Ethereum in the short term might be all the way down here, 34, 3300. But after that, guys, I think we might find a base of support. It may go for that one leg higher. And the altcoins are really the same, guys. If you're looking for momentum indication, just follow Bitcoin. If Bitcoin is sideways or down, the altcoins most likely will also not be the most favored. Can we find some exceptional performance depending on the coin? Sure. But all in all, you really need to see Bitcoin embark on a brand new leg higher, cross above the 100K, close above 100K. You'll start to see more bullish rotation into the, the altcoins and Ethereum and Solana and things like that as well. So a little bit of a muted sector as of right now is crypto. Now let's move on to our big tech name, shall we? And give me a very brief moment. Now, moving on to Apple. So Apple just continuing on its dominant move. Look, in the past month of trading, how many red days have we had on Apple? Not very many, right? And this is a company that I've also been criticizing because the valuation is high right now at 250 right now. The peg is sitting about a 3.5. Not cheap at all, guys, even on a forward PE basis. Like, this is like peak valuation of Apple before it gets into pullbacks. And the free cash flow yield as well is very, very low. So the stock is not cheap, but yet people continue pushing it higher and higher. I mean, the iPhone 16 release, although it has not been doing the numbers that the iPhone 15 was initially, the iPhone 16 has been fairly well received by the public. Also, their new Apple M4, the Apple Mini, the M4, the computer, essentially the PC, right? Very small PC, has been doing very, very well, has been getting great customer and tech reviews alike. And just the new suite of M4 chips, whether it's in the laptops, the new iPads, anything like, I know the iPads aren't the M4 chips, so you guys know what I mean, right? The new generation of products that Apple has released this year, the watches as well, the new AirPods, everything has been everything has been received very, very well. Although there hasn't been any groundbreaking changes, it just goes to show, guys, Apple is a very, very, very solid company with an extremely loyal customer base. And for that reason, the stock has been just continuing on its kind of, I wouldn't say meteoric, right? Because it's not Palantir, but it's been a very, very stable increase in price so far. That being said, we have never lost the hourly uptrend this entire move. So as a matter of fact, this is one single gigantic move. The higher lows are still here, 222. So when we do have a pullback, and how do you know we have a pullback, guys? Need to watch for the loss of the hourly trend change, right? Hourly downtrend at a loss of the 12 and 26. Then you will have your daily consolidation, which will be underway. And then we will look for one of my favorite trades in the entire book, which is going to be the breakout and the retest. The breakout of where? Well, the previous all-time highs, guys, right? Breakout, retest, and run. Now, it's not one single line. As a matter of fact, if we just kind of put the support down here, and then we use this new, because that was the range they were trapped in before, right? But now I just want to make this level very, very clear and obvious, right? So we're really looking for a retest potentially of, why does this keep happening? Oh, I see why. All right. So we're looking for a retest of this range, 236 down to about, let's call it 231, 230, right? If we can get a retest into that range, could look pretty good for a swing trade, right? Breakout, retest, and possibly run. And even if the daily downtrend happens into that level, well, you'll know, guys, we're not only looking for this on the daily, but this is a weekly time frame breakout and retest as well. Very beautiful weekly uptrend in motion by the bulls right now. Any retest of that level, guys, going to be a nice little swing trade opportunity on Apple for possible further trend continuation. Looking very good. Next area of resistance is, of course, the psychological 250, then 275, then 300. But congratulations to the bulls. It just goes to reiterate, guys, this whole time I've been saying the same thing. I'm not buying any more Apple shares because the shares are fairly expensive right now, but I'm also not selling any shares either. Warren Buffett has been selling a bunch of shares. I see no reason to sell these shares. Then again, I don't have the amount of allocation that he does and the percentage of my portfolio allocation as he does, right? But I really don't see any red flags for this company right now. I just see very casual, very nice, very traditional Apple price action right now. No major red flags on the company. Moving on to AMD right now. So AMD. Very unfortunate fact of the day down here. AMD is a key player in the AI chip market as China investigates NVIDIA for possible antitrust violations linked to its Mellanox acquisition. So guys, the US and Europe has been cracking down on semiconductor technology exports towards China now for the last 2 years. And so far, China has been relatively calm and relatively muted in its rebuttals, right? In terms of those sanctions or whatnot, or restrictions against the importing of technology into China. That being said, China will not stay on the sidelines and stay silent forever, guys. When they want to kind of respond to this, they will respond in tandem. They will also start banning products such as AMD, Intel for government use. They've done it in the past. They will start restricting the imports of ASML machines, of NVIDIA chips as well. They will also start playing hardball, right? So keep that in mind. These are the headlines that have been keeping semiconductors kind of muted, at least over the last 2-3 weeks worth of time. But these are not new headlines. This technology war between the West and China has been ongoing for the last 2 years, right? That being said, AMD, unfortunately, once again, getting beat down today, another 2.4% to the downside. And now we've lost all attempts at an uptrend, right? Daily downtrend simply continues at this point in time. We're not even daily oversold just yet. We will be very soon, but not just yet. As a whole, weekly as well now at this point in time, guys, I hate to say it, right? The entire weekly uptrend is lost. Weekly downtrend is set in motion because they tried to go for the daily trend change and they lost it, right? So now, unfortunately, weekly higher low is set. Weekly downtrend is now in motion. We don't have any time frames here, guys. We don't have the monthly. That's a downtrend. We do not have the weekly. That's a downtrend as well. We also do not have the daily uptrend either. So trying to pick the lows here without confirmation is just wishful thinking. It can keep going down, which is why, especially if I'm going to be building positions with size, I need to at least see a daily uptrend. Where's the last daily uptrend, guys? Well, it's this one right here, right? But since then, we have had no confirmed daily uptrend, so I cannot build a position with size. The only way that I'm going to play this one moving forward is writing short puts well below the market. And at this point in time, at 127, for me, I'm not opposed to playing this one because the valuation right now is very cheap. We did it at 137. It was a 1.17 peg. Now, of course, a few headlines recently from Amazon too has been saying that the demand for AMD chips has not been, well, it's been underwhelming against the expectations. That being said, the analyst price targets are still very high. The expectation for EPS growth, the expectation for revenue growth is very high. What I was telling my Discord members is even if those estimates are too high and they only are able to fulfill 70 to 80% of that EPS ramp and the revenue ramp as well, the stock would still be extremely cheap right now. But it just goes to show when something is out of favor, both sentiment-wise and kind of demand-wise, as displayed by Amazon's statements recently, guys, it can stay out of favor for quite some time, right? I mean, a lot of very strong semiconductor companies have just done nothing for the past 3 months. And unfortunately, AMD is one of those as well. That being said, the next target down here is a very unfortunate one. It's going to be all the way down here, guys. If we kind of blast through this last 125 zone, the next area, guys, is 115 down to about 105. I mean, that would be deep value territory. This is where I would consider going fairly heavy for AMD right now. As of right now, I'm not opposed to playing it, but I'll play it on a weekly rolling basis, looking to write short puts as low as possible under the market. I mean, if they want to fill me down here, 120 to 110, I'll take the shares, you know what I mean? But I need to be getting a very good price for them. So that is pretty much the analysis on AMD. But especially when Amazon says that there's a lack of demand for the chips, you kind of have to listen, guys. Amazon is the biggest player in all of cloud. They have the most market share. They have the largest installations as well. So when they say something, you kind of have to listen, right? It's not just a headline that you should kind of just, just kind of ignore as a whole. So those are my thoughts on AMD. Very unfortunate, which is why you have seen me on the chat. I used to love playing AMD back here. We even played it up here. And I never really lost money on the stock so far, other than a few debit spreads over the course of, the last couple of months. Very small, though. But most of my positions have all been wins on the company throughout this year. That being said, you've seen a shift from me over the past month since there's been these concerns, since their earnings, guys. I have only played TSM and NVIDIA, because they are the only charts that still are in considerable uptrends, and they're the only companies as well that demand is not an issue for them right now. They have a controlling share of the market, and their technology is the best. So when a sector is out of favor, I tend to play the biggest winners of the sector, right? And when the sector comes back into favor and we expand to more companies, that is when I kind of play the rest. So hopefully that makes sense. Moving on to Amazon right now. I mean, Amazon, super healthy chart, right? But we're getting a little bit extended here. Daily was overbought ever so slightly. The weekly is also slightly overbought, but a very bullish last weekly close. That being said, guys, I mean, who's in control here? Well, we had the daily downtrend and a huge engulfing one single move worth of run for Amazon. That being said, guys, just looking for a higher low, right? Anything above 196, so much space. Looking for a daily higher low for possible further trend continuation. And Amazon has so much space, guys. We can come back down here, tap the 12 EMA, tap the previous resistance right here, 215, 213, and the chart would still look completely fine. Looking for the daily higher low for possible further trend continuation, of course. Even on the weekly, guys, even if we set the daily downtrend and lean into that area down there, it would still look so healthy. Amazon, glorious weekly uptrend right now. So much space off the lows down here, that same 196. Looking for a weekly higher low for further trend continuation. If Amazon pulls down here, would it look so bad? It wouldn't look so bad at all, right? It was just like a normal pullback, the same as they've had a number of different times during this weekly trend expansion. Valuation even down here at 220 is extremely fair for the company, and they're expanding EPS, free cash flow, and net margins at a very nice rate. Still one of my favorite plays for all of 2025. Moving into Google right now, Google up about 5.3%, guys. Not too bad of a showing for Google today at all, right? Why? Well, 5.32, guys. We finally got some very good news out of Google. And this is exactly why I invest in Google. I don't invest in Google because of their cloud expansion. I don't invest in Google because of their YouTube business or their search business. I invest in Google because it's a sum of all the parts, right? We cannot forget that Google, more than anything, is a company that pushes the boundaries of technology, right? So that being said, here is their latest boundary push. Google parent Alphabet jumps on quantum chip breakthrough. I'm pretty sure a lot of you guys have seen this article so far. And on Monday yesterday, they introduced a new chip called Willow, which solved in 5 minutes a computing problem that would take a classical computer more time than the history of the universe. It was a very large number, so I'm glad that Router summed it up into it would take more time than the history of the universe. Google said on Monday it found a way to string together qubits in the Willow chip so that error rates decline as the number of qubits rise. adding that it can also correct errors in real time. And this is one of the lacks of quantum computing right now, is that it's very prone to errors, a lot more prone to errors than supercomputers. If you guys don't know the difference between supercomputers and quantum computers, I will let you guys do that deep dive on your own. I understand it, but I'm not an expert, and I'm not going to give a 5-minute seminar on the difference, right? But one of the big lacks of quantum computing so far is that they're very fast, right? However, and they can solve very complex problems. However, they're very prone to errors as well. So Google has found a way to reduce those errors, and that is a big advancement in the space of quantum computing. And who better to advance the space than one of the companies in the world that has the most amount of capital to throw at the sector, right? There's a lot of smaller players like IONQ and a lot of other stocks, but they do not have the size of a team that Google has, arguably neither the expertise nor the capital to deploy to make these advancements, which is why Google and Microsoft are kind of the top 2 players right now for advancements in quantum computing, in my humble opinion, at least over the next few years. Now, while there are no current uses, which is true, quantum computing is still in the very early stages of its own market. Willow will have major implications in science, medicine, and finance. Willow reduces errors exponentially and could lead to major breakthroughs and discoveries across industries. So, very bullish headline for Google. Happy to see that once again, this is a company that pushes the boundaries of technology, and they kind of deserve this one, right? They've been kind of plagued by a series of negative narrative headlines, right? Narratives that their search business is being eroded by the chat GPTs of this world. The narratives that the Department of Justice is trying to break up the company, has ruled their search business a monopoly, that Google's time as a top tier technology company is finished, right? So they kind of deserve this headline right there. And boy, did they smash a very big level with this one, guys. They smashed that huge resistance that's been plaguing us for many times throughout this year so far, which was 181 to 175, closing clearly above it right now. So of course, guys, daily uptrend is clear as day right now. Anything above 168, just going to be looking for a pullback here for the higher low. Now, this is a classic breakout, possible retest and run. So in the event we retest this area, guys, I will be writing some short puts aggressively here and maybe even taking another short-term swing trade call, because I closed a very juicy one with our Discord members today, which I'll show you at the tail end of the video. Now, moving on to the weekly, guys, I mean, who's in control here? It was never a question, right? The weekly bulls were always in control of this upswing, and keep an eye on the MACD, guys. MACD is crossed now and is looking for a bullish swing, and this company is so undervalued. It was undervalued at 165 and now 10% higher. It's still only a 1.3, 1.35 peg. Super cheap, still one of the cheapest companies in all of big tech right now. Fantastic net margins. And look at the growth prospects for the company. The average analyst price target is 210. My fair value as well is about 210, 220 for this company. EPS expansion is going to be amazing. Revenue expansion is going to be very well as well. So I'm not here to convince you that Google is a good deal right now. If you guys have issues with the Department of Justice headlines, that is completely normal and completely fair. There is a headline risk right there. If you ask me for my personal opinion on the likelihood of the DOJ breaking up the company or having them divest the Google Chrome browser service, I think the chances are very low, probably under 3% right now. But who am I to say this, right? Obviously, there is a risk right here. And although I can have a low probability, it can still happen. We won't know much until the judge decides that in May or maybe even June. That being said, company is expanding nicely right now, controls all the major timeframes and looking very good. So if you do get a retest, I like this company. Therefore, I will be playing this retest in the event we get it for more longs. Moving into Meta right now. Meta also, I mean, although Meta's been flat here for the last 5-6 days, I don't see any problems with this chart. They were up 5%, or they were up 0.94% a day today. Daily uptrend is clear as day. Still no signs that they want to reset for the daily higher lows, right? Never losing the hourly time frame at all, right? No sequence of lower highs into lower lows. So far, so good. So this is still just one casual daily move. In the event you guys do see a, hourly downtrend flush here and loss of the 12 and 26 in a big fashion, here you can see, right? Big move down, no follow through by the bears. So if the bears do get follow through on this move down, yes, it will be daily consolidation. We will be looking for a daily higher low. At this point in time, guys, I mean, very healthy chart for Meta, right? Anything above arguably 565, looking for a daily higher low for possible further trend continuation. And this one, classic breakout retest trade, right? Breakout, retest, and possibly run. The retest zone is this one right here. 600 down to about 590, let's call it. Retest of prior resistance, which is now support. Not looking too bad. You can see it even better on the weekly, right? Glorious weekly upswing right now. Any retests are just for that. A retest for a higher low and reestablish the weekly uptrend because we had a weekly downtrend here, engulfing move. Now we're just looking to reset into a new weekly uptrend, something like this. Everything is looking very good at Meta. Microsoft as well. Microsoft coming down a little bit. They pushed 450 almost this morning, guys, before getting rejected and ending the day into the red. So here is what I mean. Clear loss of the hourly trend, but no conversion yet by the bears. So tomorrow, the bears need to follow through, right? No conversion yet of the hourly downtrend. We'll see if they get it. If they do, then we will be heading into daily consolidation. Good thing for the bulls, they have tons of space, guys. Anything above 418, just looking for a daily higher low and possible further trend continuation. There is breakout retests all over the place right now. So do not tell me there's no opportunities. Apple, breakout, possible retest down here if we get it, right? Amazon as well. Possible retest of this location as well. Google, possible retest down here. Meta, possible retest down here. Microsoft, possible retest down here. There's opportunities all over the place. Just need to be a little bit patient for them, right? So retest area 435 down to about 425. We know that was a huge area of resistance for a majority of the year, but now they closed a very, very bullish weekly candle into that location last week, right? So very, very bullish close on this one. Weekly uptrend is now reset for the bulls. So looking for a weekly higher low. Same thing, right? Looking for the daily higher low and also looking for the weekly higher lows at the same time. So retest of this level could possibly lead me to open a little bit more positions on Microsoft. Why? Look at the momentum shift on the MACD, guys. This is like 6 months of downward momentum, and now we are finally gaining momentum to the upside. So this could be the point, case in point for Microsoft to get finally some, I don't know why it keeps squishing, my bad, guys. So this is finally where after 1 year of accumulation and better fundamentals, this could be the breakout on the monthly time frame for Microsoft, where we really start seeing over the next 2-3 months an expansion beyond the all-time highs, possibly onto the $500 target, which is analyst targets and my targets as well. Moving on to Netflix right now. So spending a little bit more time on these because yesterday's video was a little bit shorter, right? And I was kind of traveling, so I'll spend a little bit more time on these and that'll be that. Moving on to Netflix right now. Netflix, I mean, what can we say, right? Very healthy uptrend chart right now. Just part of the overall consolidation that we're seeing in the markets right now. Netflix has run a lot. Still daily overbought conditions. And I was kind of warning here. We did have a little bit of bearish divergence, right? Higher highs on the chart and lower highs on the RSI. Usually the market does correct in the direction of the RSI just because the momentum is kind of waning right now. That's what that kind of divergence says. So that being said, guys, still a lot of space. Anything above 857, looking for a daily higher low for possible further trend continuation. And even if they don't get it, even if we roll over here on the daily, is it that big of a deal, guys? Not really. Look at this weekly chart, right? Anything at this point above 745, just looking for a weekly higher low for further trend continuation. Netflix does this sometimes where they pull far away from the 12 EMA and then kind of just come into it and retest it, right? And pull far away from the 12 EMA, then either sideways consolidate until the 12 EMA catches up or just pull back into it as a whole. So I'm expecting kind of maybe something similar here if the markets continue consolidating for a little bit of a retest down here. The 12 EMA is roughly 825. Even if we pull back to 825, guys, this chart would still look very fantastic on the longer term timeframes, but still weekly overbought now for the last 4 weeks in a row. So consolidation could be somewhat expected. All right, now moving on to NVIDIA, shall we? So NVIDIA down 2.69% at this point in time, and NVIDIA obviously getting hit with that, the China investigation, right, for the antitrust headlines. Now, I mean, NVIDIA is NVIDIA, guys, right? Even though we've been consolidating, a few people like to say that this is a head and shoulders pattern, and at a certain point, I would agree, the downside of which would be roughly the retest of the 130, 125. That's why I'm not paying it too much attention, right? It is a daily downtrend. The expectation was always just for a lower high into possibly retest of the lows in the event semiconductors as a sector was weak, which they are right now. So in the event we flush these lows, 132, where are we heading next, guys? Most likely towards the 130 to 125. It could be a decent little buying opportunity down there if you want to nibble on a little bit more NVIDIA. That being said, on the weekly, guys, I still don't see any major red flags on the weekly. The chart is still looking fine in my humble opinion, right? So at this point, you can argue that it is embarking on maybe weekly downtrending cycle right now, the lower end of which would be 130 to 120. If things get really bad for XYZ reason, 120 down to 115 is my big DCA location. I have a short put here at 137. I'm not nervous at all, but my bigger DCA location would come probably low 120s down to 115. Not nervous. Why? Because the bulls never have lost the higher term timeframes, right? This, in essence, is still just looking at this point in time for a monthly higher low for possible further trend continuation. I know we've been consolidating a lot. NVIDIA has been overbought on the monthly for quite some time. So now we're just kind of cooling off not only the monthly time frame slightly, But also the weekly timeframes have been completely cooled off at this point, and the daily's not even close, right? But NVIDIA, the fundamentals continue to improve. The valuation right here, I mean, we did it after earnings, right? The valuation really isn't that bad. At 142, it was sitting just under a 2 peg, which is not that bad for the amount of growth that NVIDIA is putting out, at least over the next 3 years. So I still remain very bullish on the company. The sector is out of favor, but when a sector is out of favor, I tend to play the sector leaders. And for this time at least, it is NVIDIA. Moving on to Tesla right now. So Tesla up about 2.87% today, closing for the first time in how many years? 3 years? Closing for the first time since 2021 over 400, 400.99, 2.87% to the upside. Tesla's looking very good here, guys, but encountering this all-time high resistance, right? No secret there. This is literally the all-time highs. If we break through the all-time high, which is 407.36, right? Or rather, 414.50 is the all-time high. Very, very close to that now. Not a lot of resistance left in the way. That being said, guys, the bulls are a little bit extended, but then again, it is Tesla. This RSI can move a lot higher. And once again, right, this is another case where there's two trades here in my mind. Either there's the all-time high, breakout, retest of the level, which would become support at this point. It's now resistance, right? This box should be red. Matter of fact, let me just put it red because we don't have a weekly close, not to confuse everybody. So let me just put this box red real quick so it doesn't, so it makes sense for most people, right? So now we are in resistance. In the event we get rejected right here, we're probably heading a little bit lower down here. 359 out of 335 is the area of consolidation for a retest and possibly a second attempt, or the pure breakout of this high and then retest this whole all-time high region as support. That will be trade idea number 2. All in all, the bulls control the daily uptrends right now. Anything at this point above 330, just looking for a daily higher low for possible second attempt at those highs. And the weeklies are looking fine right now. Still a very nice weekly uptrend. This is one single big move. Why? Because we never lost the daily uptrend. Never lost the daily uptrend, never flushing the lows for a daily downtrend at all. This is one single weekly move higher. So if it tops out soon, even if we pull down on the daily and go into a daily downtrend here, guys, is it the end of the world? No, Tesla's still in a very nice weekly uptrend. Would just be looking for a weekly higher low for further trend continuation. So looking very good. Congratulations to all the bulls out there. And now lastly, Palantir. So Palantir as well, struggling a little bit, right? From the highs of yesterday, now coming a little bit back down to earth, right? 2.17% to the downside. Has anything changed for the company, guys? No, not really, right? It's just the stock has run a lot, and we need to acknowledge that when positioning for trades. That being said, daily uptrend is still to the bulls right now, looking for a higher low. Anything pretty much about 59.25, looking for a higher low for further trend continuation. We have not even lost the 12 EMA. Even if we did and set up for the daily downtrend, is it that big of a deal? Not really, guys. Who's in control this weekly here? Anything above 41, looking for a weekly higher low for further trend continuation. If we come back down here into the 50s and tag this 12 EMA, which is very logical for Palantir to do. It's done it a ton of times in the past where we run a lot, then come back, touch the 12 and go on for another leg, right? It's done it a ton of times in the past. Here's another example as well. If it does it again, if it does it again, I will be looking for maybe some buying opportunities in the mid 50s for a little bit of a swing trade higher with some short puts, right? If we come down hot, cool off this MACD, could be some decent opportunities for some short puts below this level down there. And that's how I'm looking to play Palantir myself. That's pretty much it for our big tech and others rundown, right? And the earnings as well. Now, in terms of the hype plays as of recently, right? Well, they're all kind of consolidating right now. SOFI as well, right? We can see that the RSI guys have been, what are we going to do here on the weekly? We're going to buy an 88 RSI. Not a very good proposition now, is it, right? Couple that with the fact that we are coming into the previous resistance area, which is right now. So a little bit of consolidation never really hurt anybody. Yes, daily downtrend is underway. Yes, we have lost a 12 EMA briefly, but what are we looking for here? Just looking for a weekly higher low, guys. This is one single massive move. Anything above 760 is just looking for a weekly higher low. I mean, you're talking about a stock that since the end of September is up a 2x. So, I mean, how much more do we want here, guys? We have to stay reasonable, right? So if SOFI somehow retests even 13, I'll be looking to play short puts, which is my preferred strategy. 12, maybe under. I'm not saying it's going to go there. I'm just saying if it comes down into here, that is what I'll be looking to do. I'll be looking to play short puts down here, benefit from the volatility, looking for the weekly higher lows for maybe another attempt at smashing through this resistance. But SOFI is not looking bad at all, guys. The bulls still control everything right now. They control the monthly, they control the weekly, and even though they've lost the daily is still not looking too bad, right? So that's it for SOFI. Even a lot of the other plays that have ran a ton, right? Look at AAPL. AAPL as well. They have ran an absolute ton, now embarking onto weekly consolidation down off the ridiculous RSI levels of 95. So a lot of these stocks have ran a lot since the fall, and then after the election, they went absolute turbo mode, and now we're starting to see some of that kind of phasing out of the extreme bullishness. Now, this one has started going down because they were not included as part of the S&P, but I mean, guys, like, we can't be buying things when the RSI is up to the 90s on the daily, 95s on the weekly, and expect that it just continues going up, right? It's not a very good trade in terms of risk to reward. So that's it for that one. MSTR as well. A lot of people want me to cover MSTR. I mean, this is just a Bitcoin proxy. Bitcoin's been consolidating sideways, right? So it stands to argue, if Bitcoin is going sideways, we can't expect MSTR to go to the moon. I'm playing MSTR by using short puts well below the market, but this one is still looking very healthy. It's still in a very nice weekly uptrend right now, just like Bitcoin, just some sideways consolidation. The same thing for some of your brokers, right? Coinbase has now been coming down a lot, but then again, the chart still looks healthy. What is it right now? Still just looking for a retest of the possible retest of the highs back there, right? Who's in control here? It is still your weekly bull. Still a very nice weekly uptrend, looking for consolidation. Same thing for Robinhood. Everything associated with crypto, right, has ran a ton, guys. Looking for weekly consolidation. We were well overbought on all of the weekly timeframes, the daily timeframes as well. So now it is time for a little bit of pullback. Not time to get scared. It is time to actually be patient, let the market come to us, and that is when we get some much better entries for some much better trades in terms of the risk to reward profile. So those are just a few of the ones that have been the hype plays as of recently that have been embarking on these larger legs of consolidation, right? Which is perfectly normal. Nothing ever goes up in a straight line. And you guys know, I mean, I gave you a bunch of plays on the Sunday session. Some of the ones that I'm looking for continuously right now, Coca-Cola, trying to find a local bottom here on the monthly, looking for a monthly higher low for possible further trend continuation. UPS, I know these are value names, right? They're not the high-flying tech names, but they are decent value down here. UPS as well, trying to find a local bottom using the 2020, or rather, this is 2017 through 2019 highs of resistance, now acting as support. The company's looking very good. Look at the monthly MACD, right? This is where I want to be buying companies. I don't want to be buying AppLovin all the way up here, where the valuation is crazy, right? I want to be looking for companies that offer very decent risk to reward profiles for some swing trades. They may not move as fast as some tech stocks, but I mean, there are some decent plays as well. Alibaba, right? They came down after the stimulus news was given yesterday. If we somehow revisit that 79.80 level, I think it's a great location to be picking up this company, even though China's out of favor. They're not going to stay out of favor forever. ARCG, we literally just saw some headlines from Google, right? Medicine. And excuse me. We also saw the headlines from Oracle as well. We went through their earnings, right? Medicine, genomics. This is ARCG. This is the genomics ETF. This is an AI play, indirect AI play that nobody is talking right now. Look where it is. These are the types of asymmetric bets that I'm looking for when I'm looking to play options with a lot of time that could possibly give me a 3, 4, 5, 6x, right? I'm not looking to play Palantir options up here for what? 30% gain, 50% gain. Maybe you go with some weeklies and they 2x, but I mean, you're risking it, right? No. I want the plays that have a lot of room to possibly expand. A play like Fastly, which has a lot of room to expand. I mean, I gave this one just a few short days ago for my Discord members as well. And a lot of people are up tremendously since I called it down here. Why? Because it's an asymmetric bet. This one had not ran at all. Like, look at how much we're down from the highs of 2021, right? Even though the past few weeks have ran, I was calling it down here. You guys get the point, right? I'm looking for plays in, if we're going to go for the 2021 risk on rally, I'm looking for plays that are still relatively cheap. So those are just a few of the ideas in terms of asymmetric bets for some call options where you can find maybe 3, 4, 5, 6x's if you get the expansion of the bull market and everything goes crazy once again, like 2021, rather than chasing the plays that I've already ran ridiculous amounts, like AppLovin, like SOFI. Like, nobody wanted SOFI down here. I was like the only person. I mean, a lot of other content creators were saying that it was a decent play down here, but I was the only one just constantly playing it every single week, guys, down here on SOFI. Now everybody wants to buy it up here. It's like, what are we doing, guys? You know what I mean? Nobody was talking about Palantir, all the way down here when I was buying it. A lot of people were starting to talk about it here. We were playing this one on the weekly wheel how many times in a row? We even had some short-term upside plays on it too. I mean, I have some long-term shares as well, but what are we going to do, guys? Buy calls up here? with the 87 RSI, I mean, the risk reward is just not favorable. I'm not saying it can't go up further, but I mean, you want to have a favorable risk reward profile. You don't want to feel like you're buying the top. If you feel like you're buying the top, you probably have better chances than not of buying the top, right? So you got to think about these things logically for a certain sense, right? And this is coming from me. I have Palantir shares, guys. I'm in at 1181. I still have a lot of shares, right? And I'm telling you this as a shareholder. I'm not buying more shares up here, and that's just the fact of the matter and my opinion. Other plays that can be possibly included is Airbnb, another one of the lagging plays in relation to its sector. It's been trapped here at 138, despite its sector peers. I mean, look at Booking Holdings, right? Booking Holdings, absolute monster rip. Look at Expedia, absolute monster rip over the past 2-3 months. Look at Marriott, absolute rip. Look at Hilton. These are the strongest names in all of travel and leisure right now. And look at Airbnb. Look at Airbnb. Nothing, right? This is a laggard play. Currently establishing support right now, could be interesting through 2025 or even over the next few months. Stocks like Uber that come down off of ridiculous headlines like Waymo. I'm waiting patiently. If they come down here, guys, I'm going to throw some call options at them. Very solid company, very strong valuation, and a very large competitive advantage and moat right now, although it's short-term out of favor. Companies like Elf Beauty as well. Very strong company, extremely well positioned against any recession, still down from the highs. I mean, yes, it's ran a ton. I was telling you guys, down here's a good buying opportunity, down here's a good buying opportunity, but even now, retest and possibly run. This has an attractive risk to reward profile as well. Companies like Enphase that have been left out of favor. A lot of people say, well, Trump is unfavorable against solar and clean energy as a whole. Well, no, he's really not. Trump was elected back here, guys, right? Take a look. This is when Trump was elected. All the way down here. I'll put it on the monthly so it makes sense, right? When Trump was elected the last time, did solar just die? No, as a matter of fact, that was actually the bottom of solar. Solar was doing bad under Obama. You know what I mean? And then it didn't do poorly under Trump. If anything, it went up. Then this is prior to the massive 2020 expansion, right? So it's not as if he's unfavorable. And with Elon at his side, not that bad of a trade either, right? Considering that Elon will probably push for renewable energy. So Enphase, even though Enphase has been, down slightly, I don't know why it's on my log right now. So this is the real chart. I don't know what's on a log chart, but yeah, I mean, these are the charts, right? When everything is crushed, when sentiment is at its all-time low, I have call options on this one too. I'm not expecting a crazy immediate rally, but call options with some time, 6, 12, 18 months at lows like this. I mean, I'll take the chance because the risk reward profile is quite favorable for this one too. So just a lot of different styles of plays, styles like SMCI that are getting through a lot of the FUD that was around the company. We went through their earnings. I mean, they still control 70 to 80% of liquid cooling market. And we know that NVIDIA is going to be expanding and growing for the next at least 2-3 years. So there could be a little bit of a runway of a little bit of appreciation on SMCI back to somewhat fair value if you remove the accounting risks, which they're getting through right now. If you remove the delisting risk, which is no longer a major risk right now. I mean, we're trading super, super cheap right now, even though it's 40 right now. What is the PEG ratio right now? Almost twice this. What is it? A 0.4, 0.5? I mean, I'll take a chance on this company when it's all the way down there for possible recapture of the levels, even though semis are out of favor right now, Like these are the asymmetric bets that I like to do rather than chasing the plays that kind of everybody is looking at right now. You got to look at the plays that nobody's looking at in the event that the rotation comes back into those sectors. You're already positioned, right? I know everybody likes to chase the hype ones because they're green every single day, but eventually that will stop. And as you've seen, everybody who's bought now the hype plays in the last 2 weeks at the top, they're all down. I'm not saying you guys might not recover, but I look for the more favorable risk to reward setups, and that's just my take on all the hype plays and a few of my plays that I've been looking at as of recently, which I've showcased a few times on the channel. There's many more than that, but I'm just running through some of the ones that just come to mind quickly, right? That's pretty much everything for that. Now let's look into some of the plays, shall we? So in terms of some of the plays, I'll look over the ones that we closed so far as week to date, pretty much. So we had the UPS trade, which we put on last week, right, on the 4th of December. We went with the 126 puts for 75 cents. I was saying I like UPS, 126 down to 120, ton of accumulation zone. So I will be playing the wheel on this one. 75 cents. This is over 0.5% rule for us on the short puts. And we closed them today for 15 cents. So we closed like 75+% of the profit because UPS has now bounced a little bit. Took the risk off. CPI tomorrow. If the markets continue going red, I will just redeploy this capital for a new play, right? That was one wheel trade that we closed. That was that worked very, very nicely. We still have the MS. I'll show those after. So a few more that we closed. Well, I showed you guys yesterday. I closed 2 out of 5 contracts from Microsoft. These were purchased just under $2 a piece, and we closed them at 308. This is 55% ROI on the 2 contracts. I'm holding the 3 remaining call debit spread contracts into the all-time highs for Microsoft, roughly 465. So I got a lot of time till February on those. And today we closed a short-term call option that we bought on Google. I have to send a Christmas card to the Department of Justice, because without them, it would not be possible. This was I typed in DOJ as a ticker. So Google, we picked up this one. We picked up Google right here during the fear catalyst when they said we're going to break up the company. I thought it was overdone. We bought the lows, and I was saying, listen, I'll put a lot of time on these because I think the short-term headline risk is just that, short-term headline risk. And so we bought these, I mean, not too long ago. You can see we bought them 11/21, so November 21st. So what is that? Like roughly 3 weeks ago. We picked them up for, as you can see over here, picked them up for $6 a pop. And we sold them today. I got the worst price amongst all my groups. So I closed them at the open, and I just because so I can get the alert out fast. And a lot of other people close them for $14 today, $14.50, $14.80. Over 2x. We were in at 6, guys. So I have to send a Christmas card to the Department of Justice, a little thank you message, because without them, it wouldn't be possible to get these 2x's, right? They've made me so much money, the DOJ, this year. They've made me a lot of money on Apple earlier this year. They made me a ton of money every single time I played Visa, whether it was down here or the retest down here. I mean, the Department of Justice has made me an absolute boatload of money this year. So it's only fair if I send them a Christmas card to thank them for their efforts in trying to take down these monopolies. Their efforts are not, although their efforts may be in vain, towards the companies, they're not in vain to putting money in my own pocket. So I really thank them for that. Obviously, guys, I don't want to talk too soon and kind of like, run into my own karma, but I thought I would be a pretty little funny joke there for that one. So hopefully you guys enjoyed that one. So those are the trades that we closed over the course of the day. A lot of very nice realized profits for the week so far. Can't complain at all. Now let's look at some of the plays that we are maintaining into the rest of the week, shall we? So in terms of the remaining plays, guys, you'll see that not much has changed. So Amazon, we threw on a little bit of a covered call at the end, just because I might be expecting just a little bit of a retest of the lower levels if the markets continue consolidating, which would be very logical. Amazon does have a good chance of retesting maybe, under 220, like 217, 215-ish. So for that reason, I threw on some slight covered calls, 30 days worth of time against my leap, right? We're up a decent amount of money on the Amazon leap right now. So this is just a very short-term covered call or that slight pullback, and I will hold these. As you can see, guys, I do have a decent amount of time, right? I have a whole year remaining, and I'm looking to hold these Amazon calls for as long as I can. So hopefully we make a little bit of money on these covered calls, and that's pretty much it for that. Other than that, guys, not much else has changed other than closing the UPS and the Google call. You'll see that I really didn't add any positions at all today. Why? Because I'm just being patient. There's a lot of breakout retest patterns, as I was showing you. Amazon, right? Apple potentially as well. AMD coming down into my true desired range around 120 or lower. Possible Google retest as well, right? Possible Meta retest as well. Possible Microsoft retest as well. So for those reasons, I'm saving a lot of my buying power this week. I'm not getting overly greedy on the positions either, guys, and looking to absolutely open a position just because the market's red. No, if I don't see a beautiful opportunity right now, I'll just continue saving my buying power. It's only been 2 days worth of decline on the SPY and the QQQ. If we get a little bit more, I'll start deploying more and more of that buying power. So I have a ton of buying power right now, guys. The only remaining wheel plays for the week, MSTR, we got these for $245. Look at our strike, 255. I'd be highly surprised if they come test us at 255 by the end of the week. That's a free $245 in my opinion. So I'm holding this one. That wheel position is doing good. NVIDIA's 137, slightly underwater, but as I said, I really don't mind, guys. If I get a sign here at 137, I'll run covered calls as best as I can. And if it drops into the 120s, I'll average down into the position. Still one of my favorite companies in all of semiconductors. And the SOXL 27 puts, very, very small contract. They're underwater too. We got them for 20 cents on the Monday session. SOXL could very well challenge the 27 area. As a matter of fact, they're doing it right now. now. But the covered calls on these things are so juicy, and it's only one contract, guys. It's not as if I went too heavy on these ones, right? So I'll be looking forward if I get assigned on these. Either way, we'll run the covered calls, reduce the cost basis, and just look for the share appreciation sometime down the road when the sector does return to a more favorable stance, right? Other than that, our newest swing trade, EVVTY, is doing very good. The end phase calls are doing very well as well. The IWM calls are not doing too bad. We're up on those too. The Microsoft bull puts, the bull spreads. I mean, the Google leaps are doing fantastic, right? These September 135 calls. I mean, we're up 2x on these already after today's news. So everything is doing fairly okay. I mean, yeah, we're pulling back a little bit here. We're underwater slightly on the SOXL calls, but I mean, not by that much. We did a good job. As I showed you earlier, like the end phase ones, they're doing fine, right? So a few plays under. We also have the Uber 66 puts for Friday. We'll see if we get a sign on Uber. I mean, my next average down on Uber is going to be these low 60 to 58. But even if I get assigned here at 66 for the Friday session, I don't really care. The valuation is very good. I think these headlines are a bit overblown. Very solid company, right? It's the whole purpose of the wheel strategy is being in very high quality being in very high quality companies, so you do not mind being assigned, guys, right? Actually, I want to be assigned because I like the price here, and any share appreciation will make way more money on the share appreciation and the covered calls than we will ever make writing short puts. That's the whole purpose of the strategy, right? Is making more money on the covered call side, but not everybody knows that. And the TLTs, well, once again, I've been holding these for months. These are just hedges, pure hedges. So the January 94s, we'll see what we get. Pretty sure we lost already a decent amount of money on these. And the June 95 calls, those I might add to them in the recent location. I might add one or two more contracts and build a position later for later in the year, because I do think these have a very good opportunity of being a profitable trade. So I might be looking at DCA into this position, but these were open back in October as hedges for the market, right? When we were getting slightly negative data, jobs data was bad, worries about inflation were still a bit there, pre-election jitters and stuff like that. So those were all thrown on back in the day. So that's pretty much the portfolio recap, guys. Got a lot of buying power. We closed some very nice gains so far. We have some very nice gains in the portfolio too, in terms of the wheel plays, right? MSTR, that's a free $245. So, we've closed with this MSTR so far. The Google call, the Microsoft call, debit spreads closed. I mean, we've closed like $1,000 of gains so far, and it's literally only Tuesday. So we'll see what the remainder of the week has in store for us. If we can find more wheel trade opportunities, I will share them. I'll try to give you a portfolio update tomorrow, but usually I give the next one on the Friday close. That being said, that's pretty much it for the video, guys. If you enjoyed today's video in the longer format, just was doing a little bit of catch up with you guys since we didn't get a longer video yesterday. Hopefully you enjoyed the video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new as well. We're now over 4,100 subscribers, guys. Let us try and get to that 5K milestone, but I thank each and every one of you for participating on the channel. You guys always ask very good questions. You're always very engaging, and the feedback you've given me is very positive as always. So thanks very much, guys. Really appreciate it. And as always, if you have any questions on the trading strategy, on a stock, whatever you want, always feel free to leave it down below in the comments, and I'll do my best to help you out without it being financial advice, of course. And in the event, guys, that you want all of these trades in real time, right? So I always show all my trades, right? The trades, these are the wins. The losses are the red little circles here. They're usually always really small. The targets are assignments, all of which we mostly always get out at a profit. So these are all the trades since the inception of the Discord, right? I always show these to just be transparent because nobody else does, right? So in this case, if you guys want all of these trades, not only the short put wheel trades, but also the call debit spreads, the short-term call options, the leap calls, long-term portfolio positions, and anything in between, well, the link is down below. We also do private morning live streams every Monday through Friday, private videos that I don't show on YouTube as well. And you can chat with me all throughout the day, guys, and ask me your questions on your positions, your stocks, your options, and I usually answer very quickly. So that being said, if you're interested, the link is always down below. And if not, guys, well, I guess I'll see you back on the channel. So take care. Pleasure as always. Love you guys. Have a good day of trading tomorrow. Watch out for that CPI. May free up some opportunities. And I'll see you tomorrow after the close. Peace.